Welcome back, everybody. It's currently Sunday, 15th of August, almost to 1 p.m. We're going to do our weekly recap on gold as usual. So, we're going to start with the economic calendar from the week that went from the 9th of August till the 13th. We had Monday the jobs opening report. Nothing really important on Tuesday. We had the big CPI day on Wednesday, where the inflation data were meant to come out. And on Thursday, the usual jobless claims and the PPI, so the inflation, but from the producer side. To end the week on Friday with the only important thing, the Michigan Consumer Sentiment Index. That not always has impact, but we're going to see the impact on this week. So as usual, we're going to start with our analysis that we did on Monday, the 9th of August. So we have all these events this week. We are coming from a really, really weird situation that happened on Sunday evening, which is a big drop of around 800 pips, $80, as immediately as market open after at yeah market open in the Asian session. Probably some market maker move, something happened, but we got this big drop that failed to break our really important area, which is 1680. Went a little bit below, but never immediately got rejected, as you can see from the hourly candle. Never closed below, and we got immediate rejection at the key level. From this, it's not even a key level; it's really a area of flat candle support. And this is the 5 minutes. And okay, 1680 is, yeah, exactly. It's not a key level. It's just where is reacting price in the last few months. As you can see, the big double bottom that brought price to 819 something, failing to break and keeping the bearish structure of gold. So we're going to start. We're playing with the key levels. So of course, on Wednesday we have the CPI, but today we have the jobs opening, and we're going to see how it moves. We stay on the 5 minutes and we move along. So we see correction, immediate correction of the move. This is still Asian. This is 1759, 1764. The move got immediately corrected, which leads to something that happened behind the scenes. So now we are coming towards the open of the session, London. We are reacting at 1751, not even the low of the order block, and then ranging between key levels. We're going to, during the New York session, you can identify some bearish correction of the price. Nothing special, but we can move and see also on the hourly time frame. We just made a parabolic, we got a correction, and now we are in a bearish trend, as you can see. Let's move fast. Reaction at the key levels, ranging between the key levels, and we're going towards the new day, which is Tuesday. Okay, so let me analyze, don't forget about it. So one of the reasons why we got this bearish, especially I think around here, bearish structure created, was the jobs data, jobs opening that was coming higher than expected and higher than previous, meaning that as you can see here, meaning that there are there is a supply of jobs from the economy. The only thing that we need to for full recovery is the demand. So how many workers do actually want to go back to work um, in this situation? As you can see, we will have this data coming out, the jobless claims. Okay, so let's move on. We're going on Tuesday, 10th. So we had increased jobs openings, assuring that the supply of job is there. Uh, Fed speaker were kind of hawkish, kind of optimistic, and we don't have anything special today. So we are going to play between the key level, and we go pretty fast in it. Let's go on the 1 hour. Too much. As you can see, we are not making big moves, even though in New York. We're just we got a correction on the upside. Now we are in a bearish corrective structure. Um, and we will stay in this structure until the CPI news coming up. So as you can see, there's not clear direction of price, and that's because we are waiting for the CPI news tomorrow, which is this day. We are Wednesday, coming on Wednesday, which is of course the CPI day. Higher inflation or as expected, still higher inflation would be bullish for gold. Otherwise, would be bullish for the USD. So bearish for gold. We identify the sort of order block, and we want to play outside of this order block created the previous lows and the previous highs. Let's see how it plays out, and we're going to see the CPI figures. So we're already seeing some bullish trend being created, as you can see. Okay, and this was the CPI. So as you can see, lower week and then break above the order block. Why? Because the CPI came out with these figures. So this one was slightly lower, but this one was higher than expected, and this one was still as expected, still high. It's not doesn't mean if it's as expected is good because it's still high, still 43%, 5.4, 0.3 didn't actually matter too much, and exactly the same. So it's still high, it's not decreasing, it's not yet coming down as a temporary inflation, as the Fed is saying. So that's why I was bullish for gold in continuation up. We're seeing price almost retesting the low of the order block. So we're going now to Thursday, which is the day of the jobless claims and the PPI. Of course, PPI, same idea stands as the CPI. Okay, we can indeed identify after the CPI, even before a bullish run, and now we are seeing a bearish. Why? Because we saw. Let's go to see the results. Here is now we are seeing the New York session on Thursday. We got higher PPI than previous, than expected, and we got the same jobless claims, lower than previous, but the same as expected. So you can see it did create some confusion in the investors because it created uh, bullish for gold for the PPI, bearish for gold for the good numbers. So was this doji candle was with no body. That was exactly for the indecision in the figures, the report figures that came out. But we are still, as you can see, expecting bullish structure. If you do a trend line, even from here, from the lows, we are still. You can do it like this if you want to take more points in it. As you see that we are clearly in a bullish trend. So let's see now on Friday. On Friday, what do we have? We're at the end of the week. So we saw a correction. Um, so we gotta be aware that these reactions at the previous lows might indicate an exhaustion of the bias. So we can see sellers jumping in strong as is Friday, but also if we see price breaking above 1759.5 and 1764, price can continue up. So let's see how it moved. Let's go on the 5. We saw a first reaction at 1759, still maintaining bullish structure, rejection, and then impulsive, very aggressive with New York session, New York volume, very aggressive, impulsive on the upside. So we got to try, we got the failure to break